Let's see. Okay, well, let's jump off here. Excellent. Well, I want to say hello. My name is Ben Beck. Welcome to the No BondCast, another episode of the No BondCast. A little something about me. I'm the co-founder and chief investment officer of Beck Bode. Today, I am with Joe Schipani, a big part of our investment committee, consultant here at Beck Bode, as well as utilities analyst extraordinaire at the firm. And I want to welcome him. Joe, how you doing?
Good. How are you, man?
I'm doing excellent. Thank you. Doing excellent. So we're going to talk about a few things here. First and foremost, today's topic is going to, with Joe being here, is going to be centered around our income growth strategy, one of our two flagship strategies here at Beck Bode. We're going to talk about some current events. We're going to talk about something unique going on with utilities that has been going on with utilities for some time now, relating that to social responsible and ESG investing. But first, I want to wish everybody watching today I hope they had a great Mother's Day. I certainly did. Joe, did you do anything special for Mother's Day?
Yeah, man. Absolutely, we did. We had my wife's mom over, got the whole crew in. We have a small bubble in our family, so we got to have them over, and we had Tangerini's farm, which is near where we live. They like cater, so we had a catered meal and everyone hung out, and then we had a little bonfire in the backyard. It's great.
That's fantastic. Pretty good weekend for Mother's Day. I took the family in town. We had a nice overnight at the Boston Harbor Hotel, and then a good example of, I think, the next day with kind of the world really getting back to normal. It was a nice day out on Sunday, obviously. We were out in the Boston Common and a lot of people out and about. And I think when you're in the middle of scenes like that, you start to get the feeling like everything is very near to being okay again, and we're moving forward as a world here, which is great.
For sure.
Excellent. So I don't want to take up too much time in terms of talking specifics about the metrics of the strategy, but I do want to give a quick background of the income growth strategy, talk a little bit about why it's a flagship strategy here at Beck Bode, and in particular, why one of the main function of the income growth strategy is to provide rising income for all investors, and why that's so important. So first, quick background of the strategy. As a firm, we've been running it throughout our existence. Myself and Jim, back to our Merrill Lynch days. It's always been one of the main parts of our business in terms of what we provide investors, one of our two major flagship strategies. So the mechanics behind it, some of the major criteria, what are we investing in? We're investing mainly in the stocks of companies in the utility space in the market that focus or have priority on electric generation, transmission, distribution. For example, what's causing the lights to go on and the power to get into your house. And we look for specific utilities out of the universe of utilities that are out there. We have a ranking system that we use that prioritizes one major criteria, one metric above all others. There are a few others, but what we want to see, and Joe is instrumental, and I don't want to steal too much of his thunder, but he's going to talk a little bit more about this and why it's so important in a moment. But what we want to see is we want to see a particular company in the utility space, according to some of the best Wall Street analysis that's available on the street today, where those analysts are predicting that this or a particular utilities company has the ability to raise the amount of income that it is distributing to investors like you and me over the next year. So utilities, they pay that income back to shareholders in the form of dividends. And there are specific utilities out there, not every single one, but specific utilities out there that are in such good condition economically. Maybe they happen to be in a great geographical area where there are a lot of consumers like you and me, a lot of electricity being used, an industrial area where tremendous amounts of electricity is being used, very strong leadership and know-how, efficiency on the corporate level that contributes to, number one, utilities making money, and number two, the ability to pay a lot of that net income, so to speak, back to shareholders. And I'm going to stop there in terms of some more of the reasons why, because that's some of the content that Joe's going to handle today. But I wanted to get into, okay, we know some of the metrics, what the utilities, what we're investing in. Why is it so important? Why is it so incredibly important that we focus on a strategy that centers on utilities in general? And actually, good timing on this, because I'm going to hold up the front page of, go back to my camera here and make sure everybody can see it. I'm going to hold up the front page of the Wall Street Journal today. I'm going to go to the side. Everybody can see that. Inflation surge rattles markets. Now, I'm not going to get too far into what the numbers are or the specifics of that, but I want to focus on that first word there, inflation. And in a very general sense, inflation is defined as the costs of goods and services accelerating upward over time. And why is that important? Or why do we feel that's so important for not just retirees, but every investor? Why is rising income, or why is the considering inflation so important? And why is a utility strategy important to fight inflation? Well, paramount to anything as an investor, whether you're retired, whether you are emerging retirement, statistically speaking, a 62-year-old retiring today, one of the spouses is going to live into their 90s, perhaps well into their 90s. So what that means is that at least one of the spouses is looking at a 3-decade-long retirement, 30 plus years. That's a lot of time for a couple to generate assets and grow their assets to make sure that they don't run out of money. And one of the misconceptions about being involved in the stock market is that I can't take risk once I get into retirement because of the market's fluctuations up and down. And Beck Bode and myself, we're here to say that that is in fact a misconception. The markets over longer periods of time have averaged, despite the many bear markets, the downturns that we've seen, some ugly, but all uncomfortable, has chugged along at about a 10% rate of return over time. Pretty substantial. So when you look at a 30-year time period for a retiring or emerging retiring couple, that's a consideration, not the ups and downs of the market, but inflation. What kind of damage, what kind of threat is inflation over time? And how do you combat, whether it's headlines, which headlines don't scare me, inactivity scares me, and ignoring what turns out to be the silent killer in all retirement portfolios, which is a portfolio that is not designed to generate income that rises over time. Because if you have a portfolio that does not kick off income, but income that has the ability and the opportunity to grow over longer periods of time, this silent killer, as we call it, inflation, the costs and the expenses that are involved in all of our lives, no matter what the inflation numbers say, those tend to go up at historically an annual clip trend line of about 3% plus or minus. So if it's necessity, it's vital that you have a portfolio that is designed to generate income that can outpace that acceleration of inflation over time. And that's exactly what the tenets, so to speak, the discipline of the income growth, the utility strategy is all about. It's designed to invest in investment securities, stocks of utility companies to generate income where the income next year that's being generated from the portfolio is greater than the income that's being generated today. And that's our job, obviously, as a company. The investment community as a whole, but certain professionals like Joe, who's going to speak in a few minutes here about the ins and outs of utilities. What is it in particular that makes utilities so attractive? And some other things relating to current events and ESG and socially responsible investing and how those apply to utilities. So not necessarily in that order, Joe, but maybe you can, since I just made that comment about the uniqueness of how utilities are positioned, particularly here in the United States, and why does that make them a somewhat secure, historically stable investment? Why do we as Beck Bode refer to a lot of these utilities as government-sponsored monopolies? Can you shed a little light for everybody on that?
Yeah. So the way that we as a country look at, and this is one of those government political statements. I think a lot of people might politicize this, but it's really not. There's places where markets are more efficient with government intervention. I think like classical economists would say, intervention is always bad. This is a perfect example where if you had a whole bunch of companies competing to get you power, you'd have redundancy. They would have to build lines into your house in order to, so you'd have 2 or 3 or 4 electrical lines running to your house. And they'd be like, no, switch to me, switch to me. And that would be super redundant, right? You'd have a really inefficient market. You want to have one line that's really like reliable, that you can get that power through there. And then there's some nuances underneath who's supplying the generation of that. But it's good for us as consumers, and it's good for the market to have a monopoly in a region. So here in Massachusetts, Eversource is the supplier. That means that there's no competition for Eversource to deliver you power. You can buy the generation from people in Texas. That's it. We've deregulated the state of Massachusetts. There are still states where it's a fully vertically integrated utility, meaning you're buying the delivery and the power generation from the same company. And there are some utilities that have a strategy where they want to be vertically integrated. Interestingly, you could cite Exelon, which is recently released, I think within the last couple of months, that they are separating their business. They're separating the RemainCo, which is their utilities. That's the delivery, transmission, distribution piece you said, and their SpinCo, spin-off, is their generation facility. And there's reasons for that. They're taking the generation out of their portfolio because that's not really what you're talking about anymore. That generation business, it's rough. If you have coal and you have gas, those are getting dispatched, meaning turned on less and less as more things like wind and solar penetrate the market. And so they're saying this is a more troubled business. It doesn't do what the income strategy would want because it's having to do a whole bunch of other stuff to rationalize its portfolio of generation assets. So let's just take that over here and let investors invest in the utility, which does what you're talking about. In 6 different states, they are committed to delivering your power. And so they make money multiple different ways. They have some metrics like customer average disruption interval. And that's basically how much of the time in the year are you out. I know for you, for me here in Medfield, I usually lose power maybe 3-4 times a year, probably on the scale of minutes, right? So ton of minutes in the year, we're up almost all the time. There are rural areas that may lose power for much longer, and then there's other parts of the country that lose power for very long periods of time, like Hurricane Katrina would be a perfect example. Sure. That's all part of this same metric. And there are regulators that tell them, here's where you need to be, and that's part of them having that monopoly. And so some of what they can do is make money through that, and that's where you get like the management people, like people that are good at operating a utility, they're key to that profit. But the big lever for these companies is capital investment. They get to pass through the cost of their capital investments. And you can tell again with a company like Exelon that has a tremendous amount of shift in generation, that's actually a place where they may get yield on that,
Mhm.
on dismantling, taking offline a coal plant because they're putting $1 billion into a solar plant. They actually make money in that transaction. There's a regulated amount of profit that they make off of those capital investments.
So
So yeah,
just interrupt you for 1 second though. So when you use the word, the phrase a minute ago, pass through, talk to me a little bit about that, because that's pretty unique in terms of when let's just pretend a regular company wants to make capital investments versus a utility.
Yeah.
There's a uniqueness there in terms of their ability to make money. Explain that a little bit and who they're passing that through to.
Yeah. So if you open up your electrical bill next month, you look at the charges, there's usually like 2 or 3 different lines. One is the generation charge. You're free in Massachusetts to go find whoever you want for that. And that's, some amount per kilowatt hour. Then the delivery charge is either transmission and distribution, or it's just one number.
Mhm.
Inside that number is all of their capital expense. They take all that capital expense and they spread it peanut butter across every one of their customers. And so they're allowed to pass through that at a certain rate of return. Depending on where you are in the country, it's generally around 10.5%. So every dollar they spend in CapEx, they make 10 cents. They want to spend as much CapEx as they possibly can. Your company, Ben, you don't want to blow out on capital expenses because there's no one to shunt it off to. You end up footing that bill. And so
Right.
that's the thing that's unique and different about those companies.
That's really interesting. And pass through to
Customers,
customers
you, me.
like you and I. So EverSource wants to do a project and make capital expenditure. That cost is essentially passed through to you and I as the electric consumers.
It's called a rate base. Yeah, they rate base it, meaning that number that you see for your electrical delivery, that includes all their capital expense.
Gotcha.
Plus the cost of delivering it.
Yeah.
So their OpEx, the OpEx is a part of that. It's complicated, but yes, all that CapEx gets passed through to you as a rate base.
A particular part of the stability of utilities when it comes to having to make capital expenditures, be it improve equipment, become more efficient, what have you, there's a certain amount of stability inherently in utilities, given that they can pass through a fair amount of those costs back to their rate base, so to speak.
Yeah, and I would say, a bit more of a bold statement here. It's a especially great time to be into utilities because we have such change in the grid, right? The grid was designed for, you have a big coal plant, it has 1,000 megawatts, and then it pushes it out to you. Well, the flow is going the other way now, and these companies are having to really invest heavily to adjust their infrastructure, and infrastructure costs, as you know, are really expensive. $1 billion programs are not abnormal at all at any one of these utilities. $1 billion in CapEx, that's 100 million in profit, not bad.
So that's probably a good segue into another subject here related, that this sounds certainly like an oxymoron, but a socially responsible utility, or an ESG utility. Now, given that historically coal, and still to a large extent, coal is a main source of fuel for generation. Talk to me a little bit about ESG, socially responsible investing, as it applies to utilities. We certainly one of the sub strategies of our utility strategy here at Beck Bode is in fact the ESG strategy, but we get questions often about, well, aren't utilities generally not socially responsible and environmentally sound and so on? But talk to me a little bit about the universe today and so on, and where it's going.
Yeah, and I think I've been taken for granted a little bit. I work for GE and work with these utilities. Just to be clear, that's my day job, and so I'm regularly interfacing with these companies. I don't ever talk to a utility, even a person that works at a coal-fired power plant, that isn't talking about renewables, ever. I can't have a conversation without them talking about them, and not in a negative light. So I want to first make it clear that that's what they're living and breathing, is how are we greening out our entire portfolio. There's another fact just for you to know. I think there's a recent study within the last month or two that it's actually cheaper to deploy a solar facility than to deploy coal now. So there's actual economics have reversed. And so what we're seeing is there's a profit incentive per the point about capital investment. They make money to get rid of that oil-fired coal pipe. They need to do that. They want to do that. They're like, this is great. And so where some companies ESG is like, the environmental piece of that is I'm going to do it because it's good for PR. There's actual profit incentive for them to do it. So I think environmentalism is pretty high on the list for many utilities, especially electric utilities. And to be clear, there are some utilities whose strategy is kind of how do I amortize the coal and just buy and deploy what I can. And that's probably not one that you want to invest in if you're concerned with ESG. But big time companies, holdings of yours are really, really moving hard on wind and solar. They're testing all kinds of stuff, battery storage. Those are all technically green. And there's a part of me that says every company is dirty, right? Like Elon Musk this morning about the Bitcoin thing, right?
Sure, right.
Every company's got something that's causing consumption against it. And how do we be more efficient? Every one of these companies is thinking about that.
Yeah,
Even if they're not.
That's an important point, I think, forget about the utilities universe, but like using that word, every company out there. When we're talking about social response, we're talking about ESG investing. There are faults everywhere, right? There are negatives everywhere. But I think one of the important points that I take away from the utilities industry in general is the direction that this industry is going, and particular companies. One that you know quite well, I know quite well, as being a shareholder and portfolio manager for all of our clients, would notice a company like NextEra Energy in their portfolio for quite a long time, as one that I think you've mentioned many times as sort of the poster child, so to speak, for moving into renewables and alternative energy.
Yeah, and there's a deck that I'm happy to share with people that want to see it that I prepared for the team internally here, where you can see FPL and NextEra was at the very bottom of the list in, I think, 2014. And then in 2019, by the same metric, they were in the top 5 in terms of their ESG stance. So, and there's a lot to that. I'm happy to talk to anyone in detail about these sorts of things. If you're interested in ESG, there's a series of companies that I think are really progressive on that front.
Gotcha. Excellent. Well, one maybe a current event you could shed a little bit of light on in the last few minutes that we have here with Colonial.
Yeah, this is an interesting one.
What's been going on with that over the last week or so? We're hearing about hacking and things of that nature. Maybe you can shed a little light on what exactly is going on.
I don't know if you've seen the pictures, but there's people with trash bags full of gas in their trunk.
Yeah.
Do not do that if you live in that area. So this is one of those things about resiliency of the grid, and all these utilities, they have this same cost burden of protection, right? These are critical pieces of infrastructure to our nation's security. Another good reason to be in them, like the government isn't going to let them go out of business. They can't. And so Colonial was hacked, and they were concerned about this. Now, I happen to be an engineer and technical about this, and I'll be as quick and simple as I can. They were hacked at their enterprise network level. So that's like what you and I would be talking over, right? This is a business system network. And within a controlled environment, there's a level 1, 2, and 3 network. Level 3 is where all the controls happen. So that's how they open and close valves on this huge pipeline that's bringing all the gas from Texas over to the Southeast. They thought that there was penetration from the level 1 network down to level 2. They definitely didn't get to level 3, but they thought that there was been a phishing attack, and then it moved down to the level 2 network. And generally speaking, there's what they call an air gap, which means literally no connectivity between level 2 and a level 3 system, and tons of security around any connection that there is, like very specific requirements around anything that can be sent between those two. But it's a never-ending battle, as we see with elections and everything else, for how quickly can the hackers get ahead of everyone else. And it's a place where balancing cost versus return and safety is hard for all these companies to do. And we saw them take an abundance of care. I think if you went and looked at the Storm Uri short 10-minute video that recorded, it's a similar situation where people were like, oh my God, they're gonna blow up the pipeline. It was never even really that close. Just like ERCOT was never really going to let all the power equipment in Texas explode. Yeah,
Right, when we went through
they,
that freeze, right? Yeah.
yeah, exactly. So they shut things down before it got scary,
Mhm.
and they remediated it, and the Colonial Pipeline is back up, as you probably know. And I think that's one of those things where it's always important to take an abundance of care. Um, Working with Ben has been helpful for me to understand that it's great to call somebody if you're not sure what to do about something, you feel reactive.
Mm.
It's been like 2 or 3 days and it's all sorted. Like no one needed to buy that gas. So I think that that's an interesting story for you to hear, that like that's a piece of the growth, the income portfolio, where it pays to be patient with that, with all these businesses, because they have a durable advantage and that the government has a stake in them being stable.
Yeah, an interesting point you make about giving a call and having somebody like us to speak to. I know, because in any investor's defense, this is what they see, right?
Yeah.
This is what they see headlines. And when we all read headlines, we don't read headlines that say plan lands safely, right? Because that's not newsworthy, right? You're not going to see an article that's going to talk about, okay, the Colonial had everything back on in just a few days, but you'll see headlines that will talk about threats and things like that. And so this all, I think, even though we're talking about something a little bit different, but we talk about the safety, the stability, long-term viability of the utility strategy. We talk about the necessity of engaging in a portfolio that is designed to produce rising income over long periods of time. Then it really allows our investors to, it's difficult, right? But it allows really our investors to try to ignore the headlines, right? Because these are inflation, short-term happenings. Inflation affects a lot of companies, interest rate sensitive companies in the short term. But if you are invested long-term in very strong fundamental companies and within a strategy that is well suited for what you're trying to accomplish and somebody to talk to me, that's really important because we're all human beings. I think in order to be effective, because we're so emotional over time, we need somebody to talk to. We need experts like Joe to hear his objective thoughts. You need a financial advisor at Beck Bode to talk to about, okay, well, what do you think about this? Is this a threat? Is this something we should do? So Joe, as always, appreciate your great insight here today. Thank you for everybody that tuned into the No Bonds Cast, and we'll look forward to the next one.
Thanks. It was a pleasure.
Everybody.